Ladies and gentlemen, welcome to day 5 of Woodburn Accountants and Advisors webinar series on doing business in China successfully. Today's subject is on 4 areas that are eating away at my profit margins in China. But before we begin today's presentation, I just want to go through a couple of admin things. The use of a VPN may be required by people particularly based in mainland China due to the Great Firewall. I'm also currently on a VPN, and hence there may be some technical issues along the way. Please don't leave the webinar. I will be back as soon as I can to finish the presentation. Now, once you've launched into the GoToWebinar system, you should have been prompted into a choice of audio options. The first being using your computer audio, which would be the cheapest version for you, or alternatively using a landline, either a landline or a mobile. If you are going the route of using a landline or mobile, you would have been prompted to a screen looking like this, where you will have a local number to dial in, an access code, and an audio PIN. If you are based in Asia, unfortunately, there are no local dial-in numbers, so you would have to dial in through one of the European or American numbers. In addition, if you have any questions or comments, please don't be shy. Add them into the questions section of the control panel, which is highlighted here. I will be leaving about 10-15 minutes of Q&A at the end of today's presentation. There were no questions that came in on the registration form, so if you do have questions, I will be answering those immediately and directly. Now, let's just test the system very quickly. If you could click on the Raise Your Hand button on the control panel, that will allow me to know that you can hear me and that you're listening in. If you could re-click it, that will confirm to me once again that you are truly listening in to me. I appreciate all those that did raise their hand. Thank you. Now let's begin today's session. For those that weren't participating in the last 4 days of our webinar series, allow me to introduce who we are. Woodburn Accountants and Advisors is specialized in inbound investment to China and Hong Kong. We establish, manage, and administer companies in China and Hong Kong to meet our clients' specific requirements, which include market entry, cross-border investment, tax optimization, corporate restructuring, and expansion. Our clients are international companies focused on inbound investments within Asia with a focus on China and Hong Kong. And the strategy of our clients is that they are looking to either manufacture in China, export from China, sell and distribute into China, or provide a variety of services within China. Our clients range from startup organizations to small, medium-sized companies, all the way up to multinationals and publicly listed firms. A very short disclaimer, today's presentation is a general view, and it's of my opinion from what I've seen over the last 15 years as to 4 of the top reasons why profit margins are escaping companies in China. Now, these 4 reasons may not apply to you. You might have extremely different specific needs. I would be happy to have a free consultation to aid you if you have further questions after today's presentation. A little bit about myself. My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn. Since 2003, I've been advising clients on their market entry needs for China. Rather than go into such great detail about what I've experienced, I just actually want to highlight what I've learned in the last 15 years of doing business in China. And I've learned 3 things. 1, I've learned a great deal of patience. You need to have a great deal of patience when you're dealing with employees locally, customers locally, suppliers locally, and more importantly, when you have to report to the head office. I've also learned to have an eye on detail. And the eye on detail, if you've heard the last 4 webinar series, highlights to you where you need to have an eye on detail for. And it took me time to have this. It definitely didn't come overnight. But when you're involved in China for such a long period of time, managing an organization and helping companies in itself, you learn to have it. And it's something that should be learned by everyone. The last reason is more a mentality issue. When I first arrived in China, when anything went airy, I always tried to find somebody to blame. Versus taking away my emotions, taking away my frustrations, and actually, trying to solve what was going to be the solutions. And again, I totally hit me when I first arrived in China. And as a Westerner, you tend to go that route. You always are looking for somebody to blame, and because you've lost your patience, and you just you want to move forward and you want to grow. If I would advise anybody from an emotional perspective, as an individual that's either relocating to China, working in China, try and learn these three things. A lot of patience, an eye for detail, and try not to blame everyone. Take responsibility on your shoulders and spend time on solving the problem versus constantly blaming people around you. Now, if you are already in China, my goal my goal for today, particularly when talking about profit margins in China, it's not to scare you or instill fear in you about mistakes you may have done or that are popping up in your head. It's really just to educate you on placing focus on certain areas and how to place focus on certain areas. For those of you that are brand new in China, my goal for today is really just to inspire you. My tips are actually more for prevention, and hopefully you can use these tips when implementing your businesses early on in China. So let's begin with today's presentation. 4 areas that are eating away at my profit margins in China. And on this slide, I've actually highlighted the 4 areas I'm going to be placing focus on today. And for nearly all companies that are starting up in China, profit margins are all under pressure. I do want to highlight, though, that it's not just profit margins, it's also cash flow. The primary reasons behind this are the fact that generally no budget is ever created and no business plan is ever created. If you haven't done these 2 things, it's something you should really look into. But I also want to highlight here, if you haven't done it, you're not alone. There are thousands of companies that have gone into China without a business plan and without a budget and have incurred these issues. The question, though, is where do we go from here, right? If we see that our profit margins are deteriorating, what do we do? So the whole point of this webinar is to examine these 4 areas, which really are the top areas that I've seen my clients suffer in, and that are obviously contributing to the situation. And I'm going to offer you some solutions to help businesses, to help you, basically change and grow healthier profits. So the first one is really a common sense one. Actually, from my perspective, the first 2 are probably the most common sense ones. So the first one is the price right? And one item I highlighted yesterday in yesterday's webinar on faulty leadership traits that are leading companies to being unsuccessful in China is number blindness, right? Not paying attention to the numbers. Pricing is something that may be new, and obviously young businesses in China, they overlook it. And what do I actually mean by overlooking it? You've done your research, hopefully. You've done your benchmarking against your competitors, and you've made a decision on pricing your products or services upon entering the Chinese market. But it doesn't stop there. That's not where you should be stopping your process of benchmarking and researching. Even if your initial pricing at launch was based on assumptions and rationales, these change, and they might not hold true for very long within your startup period or even throughout your China journey. Not until you're actually amid your business where you can really test your assumptions. Now, the fact is, and I've highlighted it here, the fact is that good pricing is hard to do for any company, for any industry, for any sector. It's not something where you can just pick out the numbers in thin air and say, these are the numbers I'm going to use for my pricing. But obviously, doing tests on assumptions and doing extensive trial and error is also not the way to go anywhere in the world, right? Changing your pricing so much and so often, it's going to put customers off. confuse them and probably even cause more confusion internally within your organization. So one of the things that I would highly recommend people to do is to establish a comprehensive database of intelligence by whatever means you can, and maintain that database of intelligence every quarter, biannually, particularly during the startup phase of your organization. Now, I haven't mentioned throughout this webinar series what I define as a startup period. For me, a startup period for a company in China would be at least 3 to 5 years. So when I say create your budget, create your business plan, that should be a budget or business plan that extends to at least 3 years, if not 5 years. All right, so you're doing market research based on that length of time. And what you're doing then is then adapting it, right? Creating a forecast, adapting your budget, and amending your business plan consistently, right? Adapting it, being ready to adapt it, and changing it continuously. I've been using that vocabulary throughout the webinar series. Now, using resources available to find information on your competitors is always tricky, but I kind of want to highlight an example of what my husband does. My husband is the Chief Financial Officer at Ferrero. Ferrero is worldwide renowned for Nutella, Tic Tac, Ferrero Rocher, obviously, Kinder chocolates, etc. Now, he's the CFO, so it's not his job to actually be part of the marketing team, sales team, but because he is dealing with the numbers, he doesn't want to be blinded. And what he physically does on a weekly basis with me and the kids is whenever we go for our supermarket shopping, he'll go directly to the confectionery aisles, check out his competitors, check out his own brands that he's managing, and he's going to do on a weekly basis his own research. Now, this is obviously in just one supermarket, but what you could all do if you're in the food and beverage sector is go to all the supermarkets in Shanghai, whether it's Carrefour, Metro, City Super, the mom and pop shops, like Kudi, 7-Elevens, etc. I mean, there's so many different types of supermarkets locally, Lulu supermarkets and all of those, where you can do your on-the-ground research yourself. Look at how your competitors are pricing, look at how your competitors are displaying, and look at your own category, look at your own products and see how they're doing, and then make suggestions. Now, why does my husband do this? And this is something he's learned to do over time. What he wants to avoid when he goes to the office every week is to have the various teams contradict each other, where marketing team fights with sales, fights with the GM, fights with finance, all about pricing and product display and what the competitors are doing. He doesn't want to be blindsided by anyone, but he also wants to create a cohesive team that everyone is on the same page when they're having discussions. This forms a unity within the organization. And it forms a unity that they can then, when there are issues occurring from the head office, they're all able to explain it, right? So my tip from yesterday was knowledge is power, but knowledge has to have power with every single person within the organization that has a managerial role. Don't be a manager who just sits back and twiddles his thumb and waits for his various team members to give data. Right? The goal is that you also want to be a manager that goes and sees things on the ground yourself and understand what the market is actually like. We also all know that generally the finance team is our enemy. It's normal. Whether you have a finance manager sitting in your office, whether you're outsourcing the finance, that outsourcing provider is going to be your enemy if they do their job well. Why? Because your finance manager is going to tell you when you should stop spending money, when you should be allowed to spend more money. They will be also telling you when price is not right, because they would have done the research themselves. And what you want to avoid is internal conflict, right? You want to show some form of unity. And the key thing I think in China, particularly when you're new to the market, is you've got to learn what everyone else is doing, and you've got to build up a comprehensive picture of what the real marketplace looks like. This is also why I'm a little bit against formal market research studies, because it doesn't give you that feel. I mean, I think it's an amazing experience for anybody that is looking to test whether the Chinese market is right for them by physically going into a variety of different supermarkets, not only in the tier 1 cities, but also in the tier 2, 3 cities, to have that experience, see what buyers are doing, have that local feel to the market. Now, where I would probably spend money on in terms of research would be on a genuine pricing study. If you're going to spend money on something in terms of research, what I would probably do is spend it on a pricing study to really understand how your competitors are pricing, because you may be in a sector or an industry where it's difficult to benchmark your competitors. And as a result, you just have to find a research company that can do that for you. And obviously, you should do this pricing study as often as possible. And I know with my husband, it's done on an annual basis. And with smaller companies, you may even want to do it biannually. Reason 2 is, are you overspending? And is somebody controlling your finances to tell you that you are overspending? So as I've mentioned, and I'm reiterating, you've got to create your budget to know what you are allowed to spend. I think that's the fundamental step 1 in terms of what you have to do. You've got to know what you are allowed to spend. Another issue is you've got to inform your employees what they are allowed to spend, right? And what are your internal control systems, or better yet, what are your approval processes for spending, whether it's for marketing, advertising, entertainment, whatever it might be. You've got to first create your budget. You've got to inform your team members what that budget is, and you've got to instill a control process of approval to make sure you know what people are spending their money on. Not that all of a sudden you get an employee that approaches you and says, hey boss, I've got 100,000 renminbi that I need to get reimbursed because I paid for X, Y, and Z. And you're clueless about all of this, right? You've got to be able to know what everyone is spending money on, who is spending it, and how much it is. Now in China, I truly feel that if you've created your budget, you know what you're allowed to spend, somebody is also there controlling your expenditure, then generally you are able to stay within the parameters of not overspending. If you don't have this instilled, then you're in trouble. And you really need to create a system to monitor. I mean, the key is actually really monitoring all of this. Now, you have an option of hiring a financial controller, either from the head office or preferably yet even somebody locally that has the right skill set and experience to monitor and control the spend. It's always good to have a financial controller that was also involved within the budget creation, so they know the reasoning behind all the numbers and all the figures. But obviously, I can completely understand that this may be too expensive to hire somebody with that type of skill set from day one. What you really probably need from day one is a cashier, a junior accountant, and then obviously you have your CFO flying in. The alternative is obviously outsourcing these functions. What I want to highlight here is, and we'll go on to outsourcing on the last point, is you need to clearly state to your outsource provider what functions you need from them. The general functions will be bookkeeping, tax filing, and payroll. That's generally the main functions. All of this added value service, which is actually, this is what we as accountants consider as added value, is financial controlling, is monitoring the expenses, is highlighting and picking up a yellow flag or red flag to indicate when you've spent actually too much money. Now, having solid information about where you're spending and why you're spending it is really the first steps towards keeping it under control, and from there trimming it all back where necessary. You've got to take advice about systems that are available to help your business. There's a lot of them around. And obviously with technology and software systems, this will obviously help you to control better. Now, obviously, in a startup phase, you may not have the funds to pay for this type of software system. So obviously you then have to outsource it out or use your head office to help you. I think, the last point on my slide is the reality. Cost control for a salesperson, for a marketing person, for a general manager who's in charge of growing the business is really unglamorous. It's difficult because all anybody wants to do is spend money because they truly believe that by spending money, you can grow the business. But without having someone controlling that and being the enemy and saying, you've got to stop, that's going to be the difference that helps you to survive in the Chinese market. And probably just, as a last point, be nice to the finance team, whoever they are, wherever they're located. If you are reporting to a finance guy sitting in your head office, or you've got a finance guy sitting in-house, or you're outsourcing to finance people, they're not the enemy. The goal of the finance people are really to make sure that the company is growing in the right way, and more importantly, in a healthy way. All right? Talk to them. Use them. Get advice from them. Be open and transparent with them. And have an open dialogue and an open communication. As an outsourced provider myself, I am probably on a weekly basis approached by a client or by another potential client saying something to the effect of, I have no more money. I'm out of cash. How can I bring cash in? I've spent too much. Alternatively, I have also clients saying, I think I am at a point where I can't exist anymore in the Chinese market because I just don't have funds. Do you know investors that could help me? And they all get themselves into this mess because there's been no cost control. There's been no also cash flow control, which is a key point, particularly in the startup phase. So don't have fear over finance people. Really approach them, and particularly approach them if you are not good with numbers. I see a lot marketeers and salespeople not necessarily be good with numbers. Don't be shy away from talking about numbers. You'll learn a lot from your finance teams. So really try and use them. Reason 3 is in relation to economies of scale. So for those of you that are not finance people on this webinar, I've listed a definition of what economies of scale means. And basically, it's a proportionate saving in costs gained by an increased level of production. So this is really geared more to companies that are distributing in China and have their production in their head office, or are actually establishing a manufacturing company locally in China. Now, economies of scale doesn't just happen of its own accord as your business grows. And getting the information on where and how to invest to achieve such tricky savings is difficult. It takes hard work. It takes market intelligence. You have to analyze your company. You've got to analyze your competitors. You've got to analyze your customers. And often you won't be able to achieve economies of scale without significant upfront investment, either within your head office or within your Chinese structure. And this is particularly the case if you are in the manufacturing sector, right? Because obviously you need to invest in factory space, machinery, all to achieve the lower unit cost that comes with the scale of production. So you need to plan carefully. You need to assess the different market scenarios that may arise from your business. You need to plan for detail. You need to plan for risk. Look at things that you have the ability to control and the things that you don't have the ability to control. So on this slide, I've put in 4 points about analyzing the market. So, what should you look at? What questions should you be asking yourself when you are looking to do market intelligence and analysis? So the first question is, can it absorb your increase in production at a price that will maintain your margins? What about time scale? Are you prepared to run at a loss for a certain period of time as you build up market share? Do you have reserves in funding? Will your head office support you if you take this route? You've got to assess all of these risks. And I think the key thing here is, again, be disciplined in your thinking regarding this problem. Take advice from experts about what the market can absorb. And then obviously, if the time is right, bite the bullet, invest as much as you can to reduce your eventual marginal costs. And what we've seen for trading companies and manufacturing companies that have gone this route, that they've actually been able to maintain their momentum and keep growing and expand. Now, the last point is something probably some of you were not expecting on this presentation. But when you arrive in China, most likely you will outsource all administration and compliance services. You probably won't want to create your own in-house HR team. You probably won't want to create your in-house accounting and tax team. You probably won't want to create your own in-house legal team. You may even not want to create your own in-house marketing team. You may even want to outsource that aspect. So I've had clients actually start up with one sales guy. The sales guy was responsible for traveling to as many clients per week and trying to negotiate as many deals. Logistics was outsourced, HR was outsourced, accounting tax was outsourced, marketing was outsourced, PR was outsourced, legal was outsourced, and they used a different variety of providers. You don't have to put all your eggs in one basket and use one provider. You can outsource it. And obviously, when you're a startup in China, with the fact that you have only one staff on hand focusing just on sales and nothing else is deterring him from just doing sales, there's tremendous advantage, and probably you can grow much faster than you expected. So let's look at the advantages a little bit more closely. And I've highlighted 6 advantages. The first is cost. You don't have to pay as much, in theory. Outsourcing should mean that you can get the same job done for less capital. And that's true wherever you are in the world, whether you're investing in China, whether you're investing in the UK, investing in the US, investing in Australia, wherever you're going, that's generally the consensus. And obviously, the more competitors there are in that specific field within the outsourcing industry, it will mean that there's a race to the bottom in terms of pricing and bidding. So there's, amongst a lot of competitors, there's a price war just in order to win and bid for certain clients to outsource their projects. Now, the key with cost, and we'll highlight on the next slide in terms of disadvantages, is truly making sure that you are always spending less than if you would move that service in-house. That has to be the calculation. Otherwise, it doesn't make sense to outsource any longer. In terms of talent, you obviously have access to a bigger and more direct pool of talent. Hiring locally and hiring people yourself can limit your options, because what I've experienced is if you are a Western GM arriving in China and you've got to interview now accountants, you've got no idea how to test their local knowledge and technical skill about VAT, about how tax bureaus function. You just wouldn't know what questions to ask and whether that the accountant is answering it properly. So by outsourcing, obviously your hiring locally can limit your options, especially in China, where other issues that arise is the fact that there's job hopping. You hire someone, you train them, and then there's turnover. And there's obviously competition where the staff can get poached. Now, outsourcing, on the other hand, opens your needs to the world in terms of what you can do. But again, you've got to understand cost, right? It all relates to the cost. I already highlighted on the third point, which is recruitment. You avoiding taking on more employees means that there's less for you to think about in terms of onboarding processes, issues with team fit. Are they going to pass their probation? Should we be sending them to the head office so they have a feel for the company and they meet the people that they're going to be working with? What do we have to think about from a benefits package and social insurance package, etc.? By outsourcing, you're taking the staff that already exists from your outsourced provider and you're hitting the ground running. As I highlighted with the case study, you're focused. You can hire one guy focused on sales who's going to build up your business in terms of clientele, right? So you don't have to worry about all the other administration expense aspects because you know that you have an outsourced provider that's handling it and who will probably approach you only when there are issues. Specialization, I think, is a really key point. You're hiring a real expert. Now, I will particularly say this from a tax perspective. You want to make sure that you work with experts in tax that have experienced a variety of war stories, that they know then what the procedures are. So you definitely want to have an outsourced provider that has somebody who's experienced, not somebody who's junior. In terms of law, naturally, you want to have a labor lawyer on your speed dial because primarily the biggest issues that companies face, I highlighted on a previous webinar, 50% of your time at a minimum is going to be based on HR issues. So having your labor lawyer on speed dial, that's definitely something I would highly recommend. So you're hiring real expertise, whether it's logistics, marketing, legal, HR, recruitment, accounting, tax, etc. And maybe your organization is skilled in some of these areas, but lacking in others. So you could embark on a program to bring those weaker areas in-house over time, or you could simply find an organization that already has those skills, resources, expertise, and know how to do them for you. And I think the biggest and most important aspect, particularly for China when you're in your startup phase, is the language and the culture. Everything needs to be completed in the Chinese language. If you are using a marketing person, they're going to be marketing in the Chinese language. If you're using an accounting and tax person, the financial management reports have to be submitted to the tax bureaus in Chinese. If you have labor issues, your labor lawyer is going to be going to arbitration or mediation and negotiating in Chinese. So this becomes obviously really tricky if you don't read, speak, or write Chinese. And when things go airy, this is not where you want an employee you just hired to handle it, right? So you want to make sure that you have an expert that speaks the local language and has people that can understand the local culture. By outsourcing, you're effectively placing your trust in a reliable provider that has the people on the ground with the understanding of the system, the language, the cultural barriers, and everything that may encompass that. Now let's look at the disadvantages of outsourcing and where this can affect your profit margin. So the first is back to the costs. And really the biggest issue I think that can affect your profit margin is the fact that you don't pay attention to the invoices you're receiving from your service provider, and you're not making that calculation saying, you know what, if I would now hire someone in-house, actually it'd be a lot cheaper than me. And I say this from my own experience, which is something that I'm very keen and I've always done, is I've proactively informed clients when our costs were getting too high. And the reason why I was doing that was just pure fairness. If you would do a benchmarking on employee salaries for accountants salaries in China are relatively cheap. So, there has to be that balance, right, of cost. And sometimes people are just so comfortable using an outsourced provider, they use them for years and years and years, that they don't realize suddenly that actually they could hire 3 people in-house versus paying an outsourced provider. The other aspect, I think, which also affects profit margin is that if you haven't done your benchmarking on providers, you may choose a provider that doesn't give you this added value that you need, and on top of everything else, doesn't give you the quality of work that you need. Particularly in the startup phase of your business, which I said was, generally the first 3 to 5 years of operation, you really want somebody to act as a financial controller and tell you if you're overspending. You want somebody to persuade you and push you to create a budget. You want somebody to push and persuade you to make sure that month to month you are creating a forecast for your business. You want to make sure that you are fully aware of your tax liabilities, and not that your provider is just declaring to declare without really understanding whether you could have tax benefits applied to you. And this all ultimately, without paying attention to your outsourced provider, can cause you to have lower profit margins. So it is really critical to look at cost, the balance of cost and quality and the added value service. Now, just to give you an idea of progression, what a lot of my clients did in the past is when they actually got to a certain size where I approached them and said, look, the fees I'm invoicing you, really at this point you could hire someone in-house and scale back on what you need from me. So one, the clients really appreciate this open communication. And like I said earlier, you need to have an open communication with your finance team. But an additional aspect that we offered is we also helped to recruit then an accountant for them, because I have the ability to test people's skill sets, understand what experiences they've had with tax bureaus, etc., what type of companies they've worked for, what type of work they've physically done, and we can help train this person to work in-house within their organization. And how it's all scaled back is the fact that we only then work on the added value services. So kind of working as the CFO of your operation versus doing the bookkeeping, the tedious day-to-day stuff, and then we're just the bigger added value. So this is generally the progression that we've seen our clients go. And obviously over time, when they get to a certain size, they'll have their own financial controller and they'll have their own finance manager or CFO based locally. And that's the progression actually we want to see our clients go. We want to see our clients grow in China. We don't want to see them exit the market. It's too depressing if they exit the market. We want to see people be motivated and grow their business. And you need to collaborate with your partners in that regard. And another area where I would make that comparison particularly is with marketing. Make sure that the marketing company is giving you that added value service you need until a point where you need to hire someone in-house to handle the day-to-day functions of marketing, but you use them as a marketing advisor, chief marketing officer, to help you with strategy. Right? Maybe you're hiring someone who can do the day-to-day marketing work, but you need somebody to help you with the strategy aspect of your marketing ambitions. And another area you've got to look at is talent. Now, yes, I said earlier you have an access to a bigger pool of talent, and we've seen this one before too, but is it necessarily a good thing? Having more choice within an outsourced provider isn't always better. And if you want to have the right people, it may be better to spend more time casting into a smaller local pool of expertise than really trawling a distant and larger one. Outsourcing shouldn't be a long-term solution, right? There's no substitute for having someone on staff, knowing your industry, and making time to seek out, knowing your industry and supporting your business as it grows. Adapting and maintaining your internal culture as well. Ideally, you want to have everything in-house because that truly shows that you've grown to a size where you really can do things in-house. Now, there are pros and cons to all of this, right? What I've seen in the past, which has affected clients, is the fact that whatever outsourced provider you're using, they're all service companies. And we are in the people business. And although clients might like me, they might not like my staff, or they might not like my team. and they may want me to provide them with a different person who then, you have to retrain. So it can cause havoc within the outsourced provider, where the outsourced provider then charges more because there has to be a turnover of staff internally. The other solution is obviously saying, no, I'm going to have someone in-house who I'm going to pay, and that is actually going to be something that's cheaper for me compared to now outsourcing to another provider. As I highlighted on a previous slide, on a previous webinar, and I can't avoid not saying it here today, is obviously there's turnover. The more training you give this individual, the more time you spend with this individual, it's very likely that they will go to a competitor, set up on their own, or just randomly leave you. It happens every day in China. So that is a risk that you'll also have to take. And obviously that risk could cause you, and it could also affect your profit margins in the long term. Then you've got to look at the other side of recruiting, which I highlighted just now, right? You want people, obviously, that are devoted and productive and committed to help your business along. You may not find that in the outsourced domain, but you may also not find that internally during the startup phase because the high level of turnover that could be caused. So it's you have to weigh it all out. Now, just some tips about outsourcing. Outsourcing, if you choose to do it, it has to have real tangible benefits, but you also have to weigh it against reputation and overall standing of the provider. I truly believe there is a time and a place for outsourcing, and I also believe you have to weigh in the cost of everything. Now, all the 5 points that I've highlighted here, and you will all receive a copy of this PowerPoint presentation, so I don't want to read out each of these 5 points, but what I want to highlight is the following. Is that when you are outsourcing to an agent, you have to consider them as an internal employee. And what I mean by that is you have to give them instructions. You have to create solid rules, solid expectations of what you are expecting from them, right? You have to have open transparency and communication to know exactly how each of you can help each other. Okay, I'll be open and honest with you. As an accounting firm, we don't expect to maintain our clients for more than 3 to 5 years, which is really the startup phase of a client's period in China. Reason being because it just wouldn't make sense from a cost perspective. So we have that expectation. Now, clients have maintained us regardless of the cost because of comfort. Fair enough. If you've made that analysis and comfort weighs more on your value list than cost, then by all means maintain your outsourced provider. But you need to have this open and honest communication, just as you do when you hire internal staff members. Okay? So when you are meeting with outsourced providers from whatever sector they may be, first of all, benchmark them in terms of cost, service, quality, and the person you're going to be dealing with on a day-to-day basis. Okay? I'll never forget a client of mine was benchmarking logistics companies. And after 6 months, I was just randomly asking him whether he's happy or not because I was really, truly surprised he used a state-owned company. And what he said to me was, you know what? I was fooled. The sales guy was awesome. The sales guy convinced me in the day of the meeting that I had to sign with him, and I did. I never asked to meet the warehouse people and also my account manager, which was my biggest mistake. And actually what happened within the last 6 months was the fact that they just didn't get along, one on each other. Mistakes were made because there was no open communication and transparency. In fact, my client was like, I just didn't want to communicate with the guy, which is the wrong attitude to have. If you don't want to communicate with the guy or change the logistics provider. All right? Don't hang around and wait. It's going to affect your profit margin or the quality of service you're looking for. And actually what happened in the case of my client was the fact that the sales guy had taken him around, seen all the warehouse spaces. When it came finally to warehousing his goods, it didn't end up in the warehouse he had expected. It went to a subcontractor, and unfortunately, the goods were not kept in a climate-controlled facility, and the entire 20-foot container was thrown away. Affects your profit margin when you're in a startup phase. All right, so make sure you have this open dialogue, open communication, and basically what I want to highlight with the 5 points that I've listed here is treat your outsourced provider like a local employee, right? Have that dialogue and communication. If you're upset with them, tell them. Don't hang around and sit and twiddle your thumbs and hopefully they do better. You've got to tell them. Maybe they're not even aware of it, all right? So try to build that up. And cost, I think most importantly, make sure you continuously make that balance of whether your expenditure for the outsourced provider makes sense versus doing something in-house. So that was the 4 points for today. And on this slide, I want to provide you with my top tip for today, which hopefully this presentation has highlighted to you. You've got to watch your investment. For any company in China, feeling that your profit margin is under stress is a really uncomfortable place to be when you've made a hefty investment. You've convinced investors, board of directors that you've got to be in China, right? And you know, when you also then go to China and there's tremendous growth everywhere except in your company, obviously you lose a little bit of face and it gets embarrassing. So while there's no magic bullet solution for you, I hope that at least the 4 points that I mentioned today could get you somewhere in changing your thinking about what factors you need to be influencing in terms of shrinking profit margins. And obviously what you need to do to rectify that situation is overall, watch your investment. Pay attention to it. Don't ignore it. And don't create excuses for it. You've invested considerable time and energy in doing market research, creating your business plan, creating your budget. Keep control of your investment, okay? Particularly during the startup phase, which is this 3 to 5 year time frame. So this brings us actually to day 5 of the last webinar, and I want to highlight for you the keywords in terms of doing business in China successfully. So the whole point of this slide is to bring together the topic of the webinar series, which is doing business in China successfully, and what you need to keep in mind. And I do want to highlight, some of this may be pertaining to you, some of it may not, but overall, I truly believe that you can only be successful if you really follow these 7 rules, which is 1, create your business plan, create your budget, but not only in the pre-investment stage. You've got to continuously maintain that business plan and that budget, okay? Adapt it based on what you're learning day to day in the market. Create something that's simple for you. However, create something that is simple but offers you the freedom and the opportunity to grow and expand when you need to, okay? Knowledge is power. The last 2 for me, are truly the critical ones. Knowledge is power, okay? The more you know, the more ability you have in terms of controlling and growing your business in China. And that can only be maintained through market research, business intelligence, knowing your competitors, knowing your customers, knowing your suppliers, and understanding the market as a whole. Now, you can't know everything, all right? So use outsourced providers and outsourced advisors, whether from law firms, marketing firms, logistics firms, whomever, to guide you in that process to build your knowledge level, all right? And number 7, please watch your investment. And I want to close today on a very important case study that I had quite a while ago. Now, most of the time you hear the war stories via joint ventures. And this is a war story from a joint venture. There was a Western party sitting at home within the headquarters, having found a partner, having trusted that partner and setting up a 50-50 joint venture. This was the joint venture was actually set up in northern China, and it was a trading company that eventually became a manufacturing company, so even a larger investment over time. I was approached by the client one day, very randomly, saying I would like to outsource the accounting and the tax functions. So obviously I've got a series of questions I want to know. And the first question I had was, is your company established yet or not? And he said, yes, it's been established for the last 5 years. So, point one, they're already outside of the startup phase. And I said, oh, okay, so why are you actually looking to outsource now at this point 5 years down the line? He goes, yeah, well, the issue is I haven't been able to read a financial statement in the last 5 years. I was like, I was muttering just like this. I just couldn't, I actually couldn't comprehend what he meant. So I asked him, I said, I don't understand what you mean. What do you mean you haven't been able to read the financial statements for the last 5 years? He goes, yeah, they've all been in Chinese. I'm not kidding you. This is actually what he said. He had never asked his partner to create English language financial management reports for him. And it never occurred to him in those 5 years to get them. So the first thing I recommended to him was, let's do an internal audit first, because you're clueless over the last 5 years what's been happening in your business. And I really think that you need to do an internal audit to understand what's been occurring. And we did the internal audit. Now, we found out a lot of things, but what I want to highlight is the main point, which was his partner had transferred funds from the investment capital to his brother. It was blatantly to be seen on the bank statements and in the report that there was investment funds that had gone missing and that it had actually ended up in his brother's account, meaning there was some level of fraud. Now, I'm not going to bore you with it's not boring, but I'm not going to bore you today with the details of what happened. But this just shows you, watch your investment. Understand what's going in that entity. You have no excuses in terms of time zone. The phrase, well, it's China, or I don't read Chinese. You have the ability to get everything even in your own mother tongue. If you are German, you can get financial management reports in German. There's not that high of a complexity with that. You can even have them get translated, right? But once you do get it translated and you can read them, ask questions. Don't be shy to ask questions to understand what is going on locally in the market. So I want to highlight these because I truly believe this is something that's extremely critical to remember when you want to be doing business in China successfully. Ultimately, this client exited the market. That was the overall solution for them. So we do have only one question that's come in during today's presentation. So allow me to move on to the Q&A slide. Is it best to agree contracts where sterling is paid in full into the UK bank account, meaning that the customer pays all the transfer and Chinese tax amounts on transfer? Absolutely. That's an excellent question, a question that I get asked a lot. So if you are actually not planning on establishing your company in China, or you are establishing your company, but at this moment in time, you're not planning on generating any revenue, you want all the revenue to be generated in the UK. I assume Jill is from the UK, considering it's sterling pounds that she's mentioning. It's all doable, okay? These are all negotiations that you have to just deal with your customers. Now, in your contracts, because you don't have an entity locally, right, and that would be my assumption, you don't have an entity locally, you don't want to deal with any local regulations, legislation surrounding how to transfer funds, how to pay taxes. You don't want to deal with that company's bank account locally. All you care about is getting what you must earn in the currency you want to earn it back home. Okay? So in your contract, absolutely you should highlight that your customer is responsible for any tax liabilities, any bank transfers. If they have to deal with the State Administration of Foreign Exchange, they should be ones that deal with it. Now, I also want to highlight here, because a lot of people aren't privy to this information, it seems, that you will then have a customer that comes to you and says, no problem, no problem. I can make the payment in sterling, no issues. But is usually their favorite word. But it's going to take me a very, 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 very long time to do it. Okay, this is their excuse, that it's going to take them a very long time. What I've recommended to a lot of clients is the following. If you are a UK company, open up a renminbi account in the UK. So that if the client in China ever fusses about not being able to either pay you in foreign currency or it's going to take too much time to pay in foreign currency, tell them no problem. I have a renminbi bank account in London or in the UK or in Bristol or in Manchester or wherever. And trust me, you can open renminbi accounts now in the UK. Just pay me in renminbi. Then you don't have to deal with foreign currency exchange. But we are still following the terms and conditions of the contract. And if there's any tax liability, if there is any bank transaction fees or whatever, you deal with it. I don't want to deal with it. Most of the time now, the reactions we've seen is that customers go, oh, they're more prepared than we expected. Okay, we better do this transaction sooner than we thought. All right. So keep in mind that wherever you're located outside of China, you can open renminbi accounts. And that should not prevent anything from occurring in terms of transfers. And it might also prolong the period where you actually have to physically establish something in the Chinese market because you have the ability to receive renminbi into your overseas account. All right. I hope, Jill, that I was able to answer your question. No other questions came in. So we are going to end today's webinar and overall the webinar series. As I've highlighted previously, if you would like to have a free consultation, please, by all means, don't hesitate to reach out to me. Happy to do it. Last but not least, we have a weekly e-newsletter that gets sent out every Tuesday morning. And usually it highlights a publication that's been written in that week, or it highlights events around the world where we're speaking at or webinar series that we are creating. So if you would like to subscribe to it, it is free of charge. I just need your approval to spam you. And you can just insert your email address on our homepage and I'll spam you, basically. If you don't want to receive e-newsletters, then follow us on social media, whether through the company pages or even through my own personal page. I'm happy to connect with all of you. We're on LinkedIn, Facebook, Twitter, and I have not uploaded all the videos and recordings as of yet. I will be doing that early next week, and I will be sending you all individual emails to indicate where you will be able to find them, together with all the PowerPoint presentations if you actually participated in all 5 presentations. I want to thank you all. For those that participated every single day, thank you for your support and loyalty. I hope you were able to learn something from this webinar series. For those of you that just participated, the previous recordings will be made public on YouTube as well as on our website. So you will be receiving those as well in case you want to just reflect back. So I'd like to thank everyone, and I look forward to seeing you all again very soon when we create our next webinar series or at a live event. Thank you and goodbye.